Hi, everyone. This is Jackie Cooper with the GBA Talk Show, as well as Crypto Mom 2. And I want to welcome everyone to this episode. I'd like to ask that you definitely subscribe to the GBA Talk Show so that way you can learn more about the members within the organization and about the topics that we're going to be talking to, as well as definitely like and subscribe on Crypto Mom 2. I have a really great guest on today. And before I hop over to chat with him, I want to share a little bit about myself and what we're going to be chatting about today, because there's been a lot of interesting current events. For those that might be tuning in late, we are sort of in the March, April 2023 time period. And I know that these talk shows kind of stay on the feed forever. So, but you know what, these cycles, these ups and down cycles happen constantly. So what we're talking about today will probably apply in another year as well. My background is that I'm a lawyer, and I'm also a special educator. I'm also an author and a definite advocate of the blockchain and all the creative technology that's on it and the use cases that are being developed. And I have the honor of being the GBA talk show host. And within the group, the organization, I have been meeting individuals who have been within the blockchain for years. I myself have only been within the last 4 to 5 years, so I'm a real newbie in comparison to some others. But there's a lot of history that I'm learning, and who knows, it might generate another book. But the Bitcoin Cinderella, my book that I wrote last year, I'm in the process of actually releasing the second one, the Bitcoin Cinderella and the Seven Dwarves, and it's just about Bitcoin mining. And it was a lot of fun to write that. But there's always conversations and topics that in real life can be put into fairy tales as well. And today I have an individual who we're going to be talking about the blockchain from a perspective that you probably haven't thought about, memes, and the truth behind them. So how are you doing today?
Excellent. Excellent. Thank you for having me.
Yeah, so why don't you go ahead and introduce yourself, share a little bit about your background.
Sure.
I know that you've been in this space for a while and you have a very diverse background. And you know, I think that we're going to enjoy this conversation. It's going to be a lot of fun. And um, tell us a little bit about how you got started.
Sure. Sure. Thank you so much. So, I have prior federal experience in mortgage insurance, health insurance, I worked on the launch of the Affordable Care Act and was actually at FHA when they had a policy response to the Great Recession around 2008, 2010. And from that, like whether I was ready or not, and it's kind of like that in crypto, like whether you're ready or not, sometimes you're just in way over your head and you need to find a way out. And so what I'm working on now with Vaquero Viatato is type of insurance platform in the form of an app for exchanges, wallets, and specific crypto assets. Um, I've been working in that for a while. After my time in federal service, I founded a startup. The founding team was acqui-hired by Walmart Labs. And after that, I entered the awesome world of crypto. And I just, there's never a dull moment, right? And if you think about the last couple of weeks, what we've seen happen in like traditional finance and banking, like for those of you that were around and aware of like what was going on in 2008 to 2010, like there there's a lot of similarities, and I think it's making a lot of policymakers very nervous because it doesn't make a lot of sense that $4 trillion in COVID stimulus could get us to this point where banks are failing. But we'll talk about that more about.
So, Jeremy, let me just interrupt you for a second. For those that are listening, both on the audio as well as on the YouTube side, These shows are not financial advice. They're not legal advice. You definitely have to do your own research. You have to check out multiple sources to make sure that the information that you have is trustworthy. And even if you think it's trustworthy, double check again, because as we've seen, sometimes when we think we know different platforms, we only know the surface and we don't know really what's behind it. And so again, what's public is not private. And that's so true in so many ways.
Yes, and it's also not tax advice. This is
Yes,
not
it's
tax
also not tax advice, not at all. There's a lot of risk, a lot of volatility, and you definitely have to go in with eyes wide open. This is all personal opinion and commentary today on what we're seeing in the markets. So
Mhm.
take it with a grain of salt and do your own research. So I know you were sharing before we went online some of the visuals. So why don't you go ahead and start sharing so
Sure.
we can kind of have fun looking at what people are creating and talking about us because again, FTX wasn't the first one. There was Celsius, there's, now Binance with its issues. So this has been a roller coaster ride.
Yeah, and I think when the FDIC chair was testifying before Congress, and he basically was sharing, uh, there's 300 billion that's basically needed as a backstop in a $23 trillion industry. But within SVB, there's 13 billion from 10 depositors that, right? So that's 10 people. So there's something a little deeper than just a run on the bank there. So let's talk about what got us into the current position where banks are failing, without getting too specific, like Credit Suisse, Deutsche Bank, et cetera, et cetera. So you hear the Federal Reserve, you hear the chairman talking about the market a lot, talking about how even though there's rate hikes and it's a little bumpy, there's going
Mhm.
to be a soft landing.
Yep.
So
And
the
so
soft,
let me just interrupt for a second. For those that are on the audio, we're showing a house, and the house actually has been in some sort of crisis. So go ahead and keep going.
yeah, and it's I don't right. So the house represents the market, right? It's kind of on the edge. There was some type of sinkhole or earthquake.
Yeah,
So part
exactly.
of it is hanging off the edge.
Yeah, for
Um,
sure.
and when you look down at like what's in the sinkhole, you see record debt, inflation, you see banks that are failing, you see historically low savings, you see crypto, tech layoffs. Now, crypto, I don't really see here as like a threat to traditional finance and banking because crypto doesn't get bailed out, right?
Maybe the reason why they put it there is because instead of putting the money into the banks, people are putting their money into crypto, which is a
Weakening the banks.
which is exactly a form of an asset that the banks don't have access to. So they end up not having the money in their banks to supposedly loan and lend. So they have less assets. And so it's just another place that ends up siphoning off what they need or
Yeah,
want.
I think that's an excellent point. And I mean, you would think like logically,
Mhm.
if you had fewer deposits, perhaps you might make less risky debt, less risky bets. Um, but at the same time, like banks need liquidity, and bonds and treasury bonds are some of the best ways to do that. Bond bubble's been in place for at least 20 years. So when you hike rates aggressively, the value of bonds drops, right? So then the quarterly statements from banks, they reflect this loss of liquidity, and it can lead to runs on the banks. So um if any of you have seen, I think it's, what is it, Birdcage?
Maybe it's with Sandra Bullock.
Right. So there's a virus where if you see it, like you become infected and you die.
Mhm.
So the next representation of the current like situation finance. Um, so you see Sandra Bullock, she has a blindfold on representing investors, and all around her in the fog, you see regional bank runs, credit crunch, shadow debt, Deutsche Bank. We could put Credit Suisse there, we could put SVB, we could put First Republic. You see commercial real estate and you see inflation. And all of these things, like, they're not going away. And I love the question from the reporter at Bloomberg at the last meeting with Chairman Powell. Like, he asked, basically said a lot of market experts are looking at the data, and they're planning on maybe another 25 basis points you know increase, but after that it'll be cutbacks, right? It'll be like the interest rate will be reduced. And the response is basically, well, uh Federal Reserve doesn't have that as their like base case. The problem is all of the other banks that are paying increased monthly premiums to help save SVB and First Republic and other banks, like, they're not, I don't think they're going to do that forever. So, I mean, that's why we have BFTP, which it's not like TARP 2.0, the Toxic Asset Relief Program Treasury did in like 2008 to 2012, because on that the credit limit was 1 trillion and BFTP is 500 billion. And I know that that sounds like just crazy kind of numbers, but if this is a 23 trillion dollar industry, so
So before you move
yeah,
from that,
sorry.
no, it's okay.
Mhm.
I I had heard again on one of the Bloomberg News channels that like in Canada there are six major banks. Well, in our United States there's like 5,000. So again, it's going to be interesting to see how this all plays out, because there are many of the banks that are struggling, but we don't really know how this tsunami is going to impact us. So basically, so it's going to
Yeah,
be interesting to see all this.
I don't know, like, China holds 1 trillion in like federal debt bonds. Federal Reserve owns like 9 trillion. So I'm not sure at this point um if really there are many solutions other than money printer go brrrr, right? Like, it's going to keep, not only are they going to print money, they're going to purchase bonds from the federal government, because where there is demand, like, supply will find it.
Mhm.
So it's not, I don't know, like, the honest thing to do here would be to just say, I'm sorry, uh we're, we need to liquidate, like, it's kind of like what happened with credit unions and like smaller banks ever since, really since 2010. Like, the bigger players have acquired a lot of other like smaller companies, right? You see this, it's kind of analogous to like big tech when they acquire different companies because they've kind of run out of ideas or run out of innovation, for lack of a better word, or they just have a culture that doesn't really foster it. And in their defense, like, it is very difficult to balance innovation and like optimal performance at any company. So if if any of you have if you follow Jim Cramer, I highly recommend investing in there's a stock, I don't remember the ticker, but it's the inverse of what he recommends. uh, when he recommends something, I would highly recommend taking that as kind of a warning. So what I'm sharing now is a picture. It says Jimmius Kramer, September 476. So you see Rome burning and crumbling, being attacked in the back, and you see him mostly underwater, but he's saying, I'm bullish on Rome. Like, and you can look back less than a month or and see him like promoting SVB, right? And so it should just cause everyone a little bit of pause.
Well, and that's the other thing I just want to say with everyone. Whether it's me, which I'm only a micro influencer, or anyone else who happens to be on media, you have to do your own research. You just cannot take what anyone says at face value. You have to, really dig deep and read the fine print. That's why a lot of these platforms, you click yes on these, terms and conditions without reading them. I mean, even, and I'm a lawyer, even myself, I click yes. I don't always have the time to read. However,
Yep.
you can get into real trouble because you're basically giving permission to all of these companies to do whatever they want, because these terms and conditions were not written for us as a consumer. They're written for the company that we're clicking yes to. So that's, really something. Go in with eyes wide open, that if you're going to click yes, then you might lose your shirt. So, again,
Yeah.
if a platform closes and you have not taken your cryptocurrency off onto a cold wallet, then you don't hold that crypto. They hold it, and they can decide what they want to do with it, or same with the banks. You
Yeah.
know,
And
I, I don't want to say put your money in your mattress, but basically the cold wallet idea is the same thing. So
yeah. And I'd like to invite your audience to just try and experiment, like just for the next week, the next 7 days, whenever you're like registering or signing up for a new app or a new website or anything, um, click print, just print it as a PDF, right? Print the privacy terms, user terms, and things like that with where you're signing up. And if any of them are less than 50 pages combined, I will buy you a donut. I will personally send you one. It'll be a Boston cream. It'll be delicious. You will not, you, you won't believe it. Like,
So,
especially Disney. If you
so to
look at
make sure
Disney's,
that you get your donut, I'll definitely make sure that Jeremy's contact information is embedded within the blog below.
yes, absolutely. And so I wanted to share one here. This is not really, can't say I own it, but
TikTok you're looking at?
yeah, so banks in 2008 and 2023, there's a lot of similarities here. So I want to share a little wisdom from Homer Simpson, who kind of explained, like he speaks for the banks here very well in about, it's about 5 seconds. He sums it up in about 5 seconds, so it's pretty clear.
Okay. Can't hear it.
Right. So what I mean by that is you would think after 2008, 2010, banks would think, okay, this was close, this was scary. Maybe we should like make more prudent investments with the deposits that were given. Since we have, or with the money that we create out of thin air, because we have 1 to 10 reserves, unlike crypto, which is expected to have 1 to 1 reserves. Um, but they haven't really learned anything. You might say that's because they were bailed out, but maybe not, right? It could be a number of things. And again, like when banks, they need liquidity, right? So they invest in bonds when the interest rate is increased aggressively, for the first time in what, 50 years. Like, this is going to send shocks through the system, despite $4 trillion in COVID stimulus. And so I want to share one now that kind of helps explain.
So,
So
everyone who's on the auto, you definitely
yeah,
need to hop over to the YouTube side, just because these visuals will definitely bring a smile to your face. It says Federal Reserve Crisis Solution Chart. Why don't you go ahead and explain the flow of the arrows, because uh, it's very funny, in a not so funny way.
yeah. I mean, that's the thing. Like you can look at the current crisis and you can look at prior crises, and you can say, oh, that, this is really sad that these um bad actors or irresponsible senior management have like engaged in this type of behavior systematically, planning on a bailout. Or you could invest in crypto and kind of move on. Like, when you start investing in like personal stocks yourself and in real estate yourself, then you know then you're not like a wage slave. You're not a wagey anymore, because you start thinking for yourself, you start thinking as a business owner, and you start like generating different sources of income. Anyway, so Federal Reserve Crisis Solution Chart, and this is from the Federal Reserve, by the way. So it starts with, we're in a financial crisis, right? And of course, it takes them by surprise every time. Money printer go. Brrr. So the first option is print more money. Below that, did it work? If the answer is no, then print more money. If it did work, then inflation goes up. If inflation goes up, they have to raise interest rates. After they do that, then they kind of think, okay, did raising interest rates work? Did that curb inflation? If it did, then banks are failing and stocks crash, which
You know,
leads us to
you know what this reminds me of? Smart contracts. Get this, done that.
and that's like, I mean, if I think what you're seeing right now is kind of unique because crypto isn't, it's not fading away, it's not going anywhere. And you have regulatory agencies, like for the first time in 100 years, like operating how they should, right? Like ideally regulation and the public and private sector work in partnership and they cooperate and they work together about regulation and like, okay, here's where we're going. It's why Coinbase reached out to the SEC several times saying, here's what we propose. We'd like to register. Didn't hear anything back. They propose something else in a follow-up. Don't hear anything back. And then they get a Wells notice saying that the SEC thinks that something might be going on wrong with the securities that are at Coinbase. And Coinbase asks, okay, what are the securities? No real response. No one really knows, but because they're supposed to feel threatened, ideally they will pay a fee to the SEC. I don't think so. I don't know. My money's on Coinbase.
Well, and that's the challenge that that I think the industry is having is that there's multiple definitions going on without the clarity as to what's a digital asset. And you know, again, there's the definition that the IRS has, you know, that some of them are securities, some of them are property, you know, and then you have the SEC. So this is not a traditional organism, you
Right,
know,
and that's, yeah,
and
absolutely.
and and especially when you think about um, blockchain and DeFi and metaverse and DAOs and you know all the various communities that are being created, and then the various tokens within the communities that are being created for whatever use within that community and the ecosystems.
Yeah.
Um, all I just see this as a very large, unmanageable rabbit hole, and that regulators have no. There are some very knowledgeable regulators, so I do not want to insult anyone out there.
Oh yeah,
But
absolutely.
this is a growing area, and it's a creative area. So you know you definitely want to help the consumers that are not knowledgeable, but those that are knowledgeable still can get hurt. But I don't think that everything should get repaid simply because you got hurt. I think that sometimes, you know, there's failures that happen in businesses, but it doesn't mean
Absolutely.
that simply there's a failure that you should always get your money back. And I think that, and again, I'm an attorney, I think that our communities are too litigious. I think that we should not always be suing for something to get back when we just made the wrong decision. You know,
Yeah, and
so
that's, yeah.
yes, so but with these banks, I think there has to be transparency and honesty about what's going on. I think that there might, like you said, maybe there needs to be more rules on what do you loan? You know, how
I don't know. There's I mean a lot of the industry experts, and it's not just in banking and finance, but a lot of them go from private to public and then back to private, and you know, that's fine. There's nothing wrong with it. It's just if you're going to do that, then like the there will always be waivers. There's exceptions to every rule, every regulation, and every bank knows what these
the
are.
challenge with the waivers and the exceptions, and that's where the appeals come, the lawsuits come, you know, it's the definitions come from some of these challenges, but um they cost money when you go down that route. And my concern about not having clearer definitions is that the creative business person within the DeFi space won't know how to operate their business model, because it might be
Absolutely.
legal one day and then it might be considered not correct the next day. So it's really hard to operate.
Yeah, you're right. I think that's an opportunity though, because I mean, if let's say you were that company and the SEC sends you a letter saying, we noticed X, Y, and Z, we think it might be a violation of A, B, and C rules. If you had a letter from the CFTC saying, we approve what you're doing, within the last year, like you could use that as a legitimate, this is, we were trying to follow the rules. And I think your question about regulation, like it is kind of messy, it is kind of disjointed right now. But even if there were no such thing as crypto, there would be an hierarchy. There's an existing hierarchy of regulatory agencies, right? So SEC, CDC, Treasury, IRS, like they all have a certain pecking order. IRS is not at the top. I I would I would suggest Treasury is. FDIC kind of is like the hitman for Treasury when Treasury's like, we're not bailing you out. Find another way to do it. The FDIC says, okay, we got it. We'll take it over. We'll take it from here. And then if they have Treasury and Federal Reserve backing them up, industry supports it. SVB is bailed out. Other banks are bailed out, but it doesn't look like a bailout because it's kind of other industry players instead of here's a check like 2008 and 2009 and 2010. Um,
So
yeah.
what are you showing us
Yeah.
here?
So the Fed just reported that U.S. banks borrowed $475 billion last week as the banking crisis continued. Meanwhile, over 500 billion has been withdrawn from small banks in the 2 weeks since SVB collapsed. Right. So one bank failure often leads to many more, right? So it's it's
It's like money's flowing out. It's just like a wave.
I would say it's like robbing Peter to pay Paul, but it's kind of like robbing Peter to pay the Romans who jailed him and beheaded him. I, it's kind of like that. Like this is not um if your neighbors, or if you're in your house and you notice the heat is rising and you're smelling smoke and you're on the phone with the fire department and you tell them, I think there's a fire, the heat is rising, I'm seeing smoke, there are all these different signs, and the fire department tells you, no, it's fine, it's climate change, it's there's the opposite of a polar vortex, we're having like a tropical vortex that's heating things up. At some point, like, and this is where we are right now, and this is, it's kind of the tragic thing, but the sad thing, but also the opportunity that crypto presents us with is that you can't really trust your bank. You can withdraw all your money and your bank might fail, but even if it does fail, you're going to be made whole, right? No matter how much you have in there, and that's fine. But at some point, you have to question the value of this asset that is called currency, that's called money,
Yeah.
right?
Yeah.
If it is printed, it's not pegged to anything. It's printed en masse, right? It is basically monopoly money that people still believe in. Um, but this should motivate us all to invest more in crypto. And I did want to ask your audience, I don't want to run out of time, but I did want to ask them if they could share. Happy to, if they want to email me, that'd be great. But let me
Yeah.
know, what are your like top three things you love about crypto? What are the top three things that you wish you could change? And if you were to hear about something that provided insurance to your exchange, to your wallet, to your crypto assets, like what would that look like? How much would you be comfortable paying in a monthly premium if you knew your crypto was going to fail, and you knew that if it failed, you might get back 30% of your investment. What kind of monthly premium would you pay to get, maybe 40% or 50% or 80% back after they fail? I would love to hear thoughts, comments on that.
I have an idea in relation to that. Since I do have a blog, what I can do is create with you a little Google form, so that way
Sure,
those
great.
that are listening, because I can embed our conversation into the blog, those that are listening can simply go to that little Google form, answer the poll survey, and get an idea as to everyone's feedback and things like that. So for sure, we can definitely do that in a way that can collect the information, because I know you are looking at trying to spearhead something in that area.
Yeah, that
So
would be great. Thank you so much.
yeah,
Yeah.
so for sure. So any last minute thoughts before we sign off? Because I know you and I've had many conversations, and there's always a lot of philosophy behind it, a lot of facts behind it. But again, any last minute thoughts that you want to share to the conversation?
Well, I do want to share, like, I kind of want to talk about, like, if you if you don't learn from the past, like, you're doomed to repeat it,
Yeah,
right?
yeah,
So if you're uncomfortable, like, politically, financially, morally, with the current bailout that's in place, then do something about it. Do something rational and logical, and invest in crypto after you know, get your advice from your own financial advisor, tax advisor, legal advisor. Like, make a reasonable, manageable amount of an investment, and, you know, see what happens. Because this bank crisis, it isn't going away. Like, if it is paused, right, then it'll happen again in about 10 to 15 years, and again and again and again. And I don't think anyone can honestly say it's because there's not enough regulation, right? It, no matter how much regulation there is, there will always be ways around it, and big players, industry experts, regulators will know all of these ways all the time. So, yeah, thank you so much. I would love to hear from your audience about what they love about crypto, what isn't working, and what shape, if they what would insurance for these types of assets look like to them, and would they be more comfortable paying those in, like, fiat currency or crypto? Like, which one would they like the most? Thank you.
yeah, sure. And the other thing that I want to just mention to everyone before we sign off, n- diversification has always been a mantra that we've heard about, from retirement planners, financial advisors, that type of thing. And so, again, I know as a teacher, when I first started, I was approached by someone to put money into mutual funds, to put money into stocks, put money here, put money there. Never a mention about crypto, which is fine. However, I think that as individuals go forward, I think that we all need to do our own due diligence, but also look at what are the products that are out there. And crypto, definitely volatility, but it's a product out there and it holds value. And so you just have to decide which one you want. Are you looking at Bitcoin? Are you looking at a
Absolutely.
altcoin? And you have to decide, what is the value that you're looking at for short term or long term, and what's your comfort level of risk? Because everything has a risk. Even stocks have a risk. So,
Yeah, if you leave your house in the morning and you drive to work, if you go to the grocery store, if you go for a walk or exercise or bike or go to the gym, like, there is inherent risk in everything that we do.
yeah,
Like,
yeah.
it's okay. Like, it's
It is. And so you just have to figure out what is your comfort level of risk. And, for some, they might be very conservative, and for others, they might, want to jump out of a plane, with a parachute.
as long as you have a parachute and a backup, it's fine,
Right,
right?
exactly.
Now,
So,
whether it's a golden parachute, I don't know.
For sure. So everyone remember, I will have a variety of links below so that way you can take your poll and give feedback. And then, also, as Jeremy mentioned, if you want a donut, definitely, for a week, go ahead and print your privacy and terms and conditions and everything and see how
Right.
short or how long they are.
Those privacy agreements, like you have to agree to them because if you use your privacy is diluted, limited, monetized to the maximum extent possible. Um, my prior startup, Homemade, was kind of founded on not it was founded on giving people a commission or percentage of what all these apps do with their information. But yeah, let me
We
know.
we
Oh,
definitely give our information out without realizing that we have made it easier for identity theft.
yeah, there's tremendous value in everything that you do digitally.
Mhm. There is.
So you
And
should collect more of that value.
exactly right. No, I agree with you on that. So everyone, again, remember to subscribe to the GBA Talk Show. The link will be below, as well as Crypto Mom 2, and I appreciate that.
Yeah,
And as I always mention for everyone, be kind to yourself, be kind to others. We're all so interconnected and we're all part of one world. So have a great day. Thank you guys.
great. Thank you all. Have a good one.